Well, let's move along then. Our next guest on the show is Anshul Saigal, Head and Executive VP at Kotak Portfolio Management Services. Anshul, great to have you on and good to be speaking with you as always. And we're speaking at an interesting time, right? Because I remember a lot of our past conversations where you've always focused on finding stocks where there is a value, where perhaps, the best is not being reflected in the stock price. And now at about 19 times, forward earnings, maybe the market is throwing up more such pockets than at 23, 24 times as we have usually traded. So where do you see these pockets of value where perhaps future growth is not being fully priced? And give us some, little specific examples if you can.
Hi, Surbhi. It's a pleasure to be speaking with you as always. There are, for a portfolio manager, there are conflicting interests. On the one hand, you seek stocks where value exists and where you think that over the next 3-5 years, there can be significant upside from current levels, hence the risk reward is favorable and you go in and buy. On the other hand, you have this eerie sort of comment that keeps going on in your head, which Warren Buffett once made, which is that the markets can remain irrational longer than you can remain liquid. And as a result, you've got to balance both objectives, that you've got to, be in the right names, yet balance the fact that markets can work against you for a long period of time. And your names should not get impacted by this sort of volatility in the markets. Having said that, at this time, it looks like, and to us, when we dig deep, it looks like there are ample opportunities in the markets to make money over a 3-5 year period. Over the last 1.5 years, nearly 18 to 20 months, markets, the broader markets have seen a significant correction, and dime a dozen opportunities are down 30, 40, 50%. While their businesses are not impaired permanently, businesses have been impacted, but those are only temporary because of reasons of war, inflation, interest rate increases, etc. And businesses are bound to come back. Some pockets where we are seeing these opportunities are financials, capital goods, consumer durables. We see these opportunities even in defense. If we go more into commodity plays, then sugar is one pocket where we see these opportunities. And even IT for that matter. Last year, the IT index is down some 25, 26%. Some stocks which were trading at 30, 35 times price to earnings now are available at 15 times forward price to earnings. That seems like a significant correction. So there are ample opportunities. And as I've said before, I'm spoiled for choice.
The problem, Anshul, is that in the small cap universe, one stock in the sector can be up 50%, but another stock in the sector, in the same sector, can be down, 50%. So you've got to really pick the winner in the small cap space. It's not one brush which applies to the entire universe. But, tell us your call about the sugar. Because that's not a sector we often see large investors dip their fingers into. It's usually the retail investors, the traders who, participate in the cyclicality of sugar. Tell us why you like sugar and what is the opportunity that you see?
Rima, hi. Over the last many years, we've seen sugar production move up from somewhere close to 28 million tons to 35, 36 million tons. On the back of higher yields on cane. Now, that was causing a big problem for the industry because farmers were not getting their monies on time. Mills were not making money because sugar prices were depressed. This establishment, in fact, if you ask me, one of the most elegant sort of reforms that this establishment has brought into play is the sugar reforms. They brought in a policy where there was a minimum sugar price applied, which meant that sugar couldn't be sold by the mills under 31 rupees. And second, the ethanol policy was a game changer for this sector, where this establishment preponed the ethanol blending from 20% by 2030 to 20% by 2025 and gave incentives for ethanol production. What this did is it shifted cane away from sugar and towards ethanol, so the oversupply of cane came down. Second, the temporary increase in sugar production, that also came down. Third, you had a huge import bill because of crude. That came down to the extent of 4 or 5%, which again was positive for the current account. And fourth, it was also good for the environment because ethanol is less polluting than regular crude. Overall, this was a win-win solution. Farmers got their money on time. Mills did well. They made money. And all of this is yet not priced into the prices. And imagine a scenario where you have scanty rainfall in this country, where sugar is cane particularly is a high water requiring commodity. If there is a scanty rainfall year, then sugar prices can go anywhere. We are already seeing some uptick in that. Globally, sugar prices are at 27 cents. They used to be at 18, 19 cents. That is unprecedented. India is yet to follow, and that will reflect in stock prices subsequently. Looks like a favorable risk-reward opportunity at this time. We'll wait and see how it plays out.
Anshul, hi, afternoon. Although there was some reports over the weekend suggesting that given not this sugar season, the sugar season was already passed, but the next season there may be some sugar export ban or something. And of course, I mean, it's a very politically sensitive commodity, right? I mean, lots of elections, etc. But those are things which can happen for anything. We can't. They're unknowables in that sense, right? Anshul, you mentioned consumer durables as well as an area you like.
Absolutely.
Which segment particularly there?
You see, if one was to be more recent in terms of opportunity, then I would say the air conditioning, fans, fast-moving electrical goods, that space looks interesting. We are already witnessing a hotter summer, and it looks like that will reflect in volumes for this sector going forward.
Hi, Anshul. Anshul, name a couple of stocks if you can, what you'll have added, with due disclosures in the last couple of months, because there's a big party going out there. And, a lot of our viewers will like to know a couple of stocks with the disclosures, that something new that you would have added or something that you'll have doubled up on the position.
See, hi, Nigel. We like the commercial vehicle space. We think, there are only two players in this space, two largish players in this space. We like the pure play in this space. We believe that that company has significant room for margin expansion. They've embarked on a 3-year exercise to enhance market share and expand margins. And that exercise started sometime in financial year 23. So from a standing start of, say, 6.5% EBITDA margin, they want to rise beyond the previous peak, which was about 11.5%, 12%, which means that if they were to execute well on this space, they could very well double their margins over a 3-year period. That seems like a significant earnings growth trajectory at a time when the cycle itself is positive. Given that, we like this space and we like the company that we've added to in our portfolio.
Okay, by the way, look at the momentum in the market. This is turning out to be quite a solid session today. 160 points up on the Nifty, and the index is racing away. 18,250. Remember, 18,887 is the all-time high. We're still some distance away from that, but that chart has momentum written all over it today. Mid-cap index is also not bad at all, about 0.6% higher over there. Anshul, before we let you go, what's the feeling on the market now? We had a pretty excruciating start to the year, very painful and slow March, and then came the April rally, and look how things changed, right? But hand on heart, how do you see the next 6 odd months play out? Do you expect that we'll largely be in a range, or do you see a breakout ahead?
Surabhi, this has been a rally where very few people have participated because people have been anxious about developments globally. And as a result, there is money sitting on the sidelines waiting to come in and invest. That is giving support to the markets. And in the recent rally, it is this money which is leading the markets up. On the other hand, there is a very real fear that you will have a credit event globally. The last interest rate hike may well have been the last straw on the camel's back. And we have small banks in US cracking like there was no tomorrow. As much as $1.5 trillion of market cap has been wiped out in the last say 2 odd weeks. In all of this, I can't see a situation where credit growth picks up in the US. And if that doesn't happen, that is the lifeline of business. I see that will impact the economy. How much of an impact only time will tell, but clearly between now and the year end, there will be an impact on the US economy. And that is an engine for global growth. So it will impact global growth as well. Whether that is all priced in or not, but this is definitely a risk aspect, and one must be vigilant, whether in the form of holding cash or just defensive positions. But this is a time where one must be slightly vigilant between now and the next 6 months.
Okay, all right. Anshul, thanks so much for stopping by and giving us your take on the markets as well as sectors that we discussed. By the way, at this